We're here today with Tracsis CEO Chris Barnes and CFO Max Cawthra to discuss full year results 2020. Chris, can you provide us with an overview of the period?
Absolutely. Overall, we're very pleased that the business has been able to robustly navigate the coronavirus crisis. It's no doubt been a difficult period for lots of people, and I'm really pleased with how my team have responded to the challenges and to the actions we've taken fundamentally to protect their health and well-being. The business overall, there's some really great highlights from the past 12 months. In particular, we're really pleased with the strong growth in our rail technology and services division. It's outperformed our budget expectations. We've seen really strong growth, and it's been generally unaffected by COVID-19. So that's a great outcome. Correspondingly, we have been hit on our traffic and data services division. We've seen events postponed. We've seen traffic projects delayed, and that fundamentally has had an impact on our overall business performance. However, those challenges have been mitigated through cost reduction actions and through the business responding quickly to the challenges that we faced. So overall, we're very confident in the long-term growth prospects of the business, and we're very much committed to our long-term strategy. Some of the other highlights to pick out: the government continues to invest strongly in digital rail, and the Tracsis business is really well aligned to exploit those opportunities, whether that be in smart ticketing, whether that be in software, whether that be in asset performance. So that's great. And in the period, to reinforce our confidence, we've secured another large multi-year contract for our Trax Enterprise product with another one of the UK's major train operators. And that obviously gives us lots of confidence in the future of that product and the success that will drive for the group. And in addition, to drive the growth in the smart ticketing arena, we acquired iBlocks in March of this year. And that business has a really exciting pipeline of opportunities ahead of it. And finally, I'd just like to say a big thank you to Max, our CFO, who after 10 years with Traxis will be stepping down in the new year. So Max has done a brilliant job for us, and I'm pleased to welcome Andy Kelly to the group, who will join us as CFO in February.
Max, can you give us an overview of the financial performance in the period?
Yeah, sure. We think we've delivered a solid set of numbers against what's been a really challenging backdrop. Group revenues were 48 million, which was down 2% on the previous year. Within that, we've had really strong growth from our rail technology and services business, with revenues up 17% to just over 25 million. And within that, we continue to benefit from high levels of recurring revenue across our wide range of software products and also some multi-year deals, which gives us good visibility. So growth at a group level has been held back by the impact of COVID on our traffic and data services division, where revenues were down 18% to just over 22 million. So we think there's been an overall impact of about £10 million versus our budgeted expectations from COVID. But nonetheless, we've taken some decisive action on cost reduction measures, which have now been fully implemented. And we're confident that the division is really well placed to bounce back as restrictions start to ease over the coming year or so. We're really pleased with the contribution from the acquisitions made in the previous year, all of which have performed really well. EBITDA of 10.5 million was down on the previous year slightly because of the impacts of COVID, but we were pleased with where we ended up, and to deliver a strong margin despite the challenges of COVID was a good achievement. We maintain a strong balance sheet as always, with around 18 million of cash at the end of the year. We have no COVID deferrals, so we're fully up to date with our corporation tax, VAT and pay-as-you-earn. Cash conversion remains really strong. We've always been very proud of our profit to cash conversion. And as always, the group has no debt.
Chris, stepping away from the financials, how's the group developed during the period?
Okay, well, we've focused on two key areas over the past year. One key area is around accelerating organic growth, and the second is around continuing our track record of successfully bringing new acquisitions into the group. So talking about organic growth, one of the exciting things we've launched this year is something we're calling the Innovation Hub. And what that is that's a mechanism by which we can bring together all of our key experts from across the group and actually look at how do we solve some of the key industry challenges that exist right now by developing either new software products, new pieces of technology, new data analytics platforms, or whatever else it might be that really uses the skill sets that exist across the group. And that's created a real hub of excitement within the organization. And that will be the mechanism that helps us identify where do we invest in future software and technology solutions across the industry. Alongside that, we've also launched a shared services model. And the objective behind that shared services model is to give us a central platform from which we can launch best practice across the group. and basically have our business units focused on the things they do best, which is client engagement, innovation, and ensuring we deliver projects to meet our customers' expectations. When it comes to acquisition, we acquired iBlocks in March of this year, which is a really exciting addition to the group. They are a software and technology business based around smart ticketing and automatic delay repay. And in addition, they support a number of fundamental systems that underpin the rail industry within the retail and customer experience sector. The smart ticketing piece in particular is really exciting right now, following the changing travel patterns that are emerging post the first phases of the coronavirus pandemic. And we're really looking forward to working with the team there to develop a new product offering for the group and to ensure we're offering something exciting into the industry.
Max, how's trading been post-period end?
Good. Momentum's carried on with trading, renewals and new contracts all secured. We were pleased that the first quarter trading has been in line with the board's expectations, so that's got us off to a good start for the new financial year. And there's plenty going on in both divisions. We still have a couple of major rail contract opportunities in play, which are approaching the final stages of negotiation. And we're also pleased to have secured and renewed a couple of large multi-year agreements for our traffic data and event businesses. This is really important to us because it underpins our confidence in the long-term potential for these business units. And also, really importantly, we've renewed all of our software licenses that were due for renewal in the first quarter of a new financial year. And finally, from August onwards, the group has been reorganised into a new structure in order to align ourselves with the key areas of future transport industry growth. This format will be adopted for future external reporting purposes.
So, Chris, what are the market drivers and how do they benefit you going forward?
Okay, well, there are three key areas which are of significant benefit to the future prospects of the group, and they really relate to rapid urbanisation, they relate to big data and connectivity, and they relate to enhanced performance. And all of these are relevant across all of the transport space, and they really are driving a move towards a much more digital future. And if I give you a few examples from the Tracsis business, we are seeing obviously significant interest in our smart ticketing offering, which is all around driving improvements in customer experience. And if you look at population growth, you look at urbanization, it's all around how do you move people more quickly and more easily through society. So that's a really interesting area for us at the moment. Then if you take a product which we're well known for in the form of Trax Enterprise, that's all about driving improvements in operational performance for train operators. So that's around on-time delivery of trains, rostering of people, the management of the overall operation of the train service. How do you recover from issues in service during the day? And very much that's around how do you enhance the performance and, again, the experience that the consumer has. So another really interesting area of growth. And then if you take the whole area of digital railway, of big data, of connectivity, then both our remote condition monitoring business and our Ontrac business, which is all around risk management and safety, both of those businesses are really well aligned to some of the key challenges that the transport industry faces in terms of using its data, analysing how to improve its performance by using that data, and then using that information to drive future improvements across the transport sector. So all in all of those different drivers really align well with the Tracsis product offering. It aligns really well with the areas that we're looking to invest, and also aligns well with the acquisition pipeline that's currently under development and will also clearly form an important part of our future growth.
And Chris, how would you describe the outlook for the group?
We remain very confident in our medium to long-term future. Our 3-year strategy for the business remains unchanged, and it's built around really strong financial fundamentals. The business continues to have excellent cash conversion. It has a really strong balance sheet. The business remains debt-free, and that puts us in a brilliant position not only to continue investing in the innovation and development of our own products, but also in pursuing new acquisition targets that will further help develop and grow the group. So we see key drivers in our rail business being around the fact that we continue to see governments investing heavily in new infrastructure, in the digital railway, in the safety related aspects of the network, and that's all fantastic, and that aligns really well with the products that the Tracsis Group has. And we're increasingly seeing across the transport space how important data is becoming, whether that be data collation, whether that be analytics, whether that be informatics, and the power by which you can use that information to drive really important investment decisions. All of those things are, again, really important for the Tracsis Group. So alongside continued organic growth, we'll continue to pursue acquisitions. We intend to continue looking at how we internationally expand the group, and we continue to look at all opportunities that will increase the amount of recurring revenue that we have and will increase the amount of technology that we can develop within the organization to solve the challenges that exist across the transport space. So overall, we remain very confident in the group's ability to navigate the short term, and towards the longer term, we're really excited about the prospects for the group.